So Cheryl, summer's behind us. We're heading into Q4, notoriously busy time of year, but I suppose from a market perspective, what are you seeing at the macro level?
Well, the post-summer revitalisation is always busy. Everyone's back from holidays. This year particularly, we have got fairly underutilised hiring budgets. Naturally, we're going to see that kicking into the last quarter of the year. And of course, we've got really positive investor sentiment across all asset classes at the moment, which is great to see. Getting into that specifically, hedge funds are just going to continue to focus on growth, strategizing. I don't think we'll see much of a slowdown in the hedge fund space at all. Private equity remains fairly cautiously optimistic, steady, but in comparison to hedge fund, steady would be how I'd describe it. And real estate, we're finally starting to see a little bit of re-uptick, a recovered asset class, hopefully, and starting to see a lot of opportunity. Similarly to the hedge fund space, private equity and private credit are really high demand. And again, we're seeing a lot of movement in that market and a lot of growth.
Very interesting. And I suppose from an accounting and finance point of view, any specific trends there that you've seen or anticipate?
Naturally, as businesses are growing and re-strategizing, there's quite a large focus at the moment on businesses being able to unlock the time of their accountancy and finance team so that they can focus on more value add. So candidates that can really demonstrate competency in process efficiencies, creating automation in their processes, essentially allowing themselves to focus on much more value add business facing work. 0 to kind of, I'd say 4 to 5 years post-qualified, and we are naturally going to see higher demands on. But this year, interestingly, we've already seen a 20% uplift in senior hires being made across the market, which comparative to 2022 and 23 is quite significant. Fund operations, for me, will remain very, very busy as well. So candidates that sit in the fund finance piece that can demonstrate that they have a real solid understanding of fund operations and the proximal teams that they work really closely with will stand themselves in good stead as the market prepares for, again, more fund launches and more businesses being able to fundraise more effectively as a result of that positive investor sentiment.
The market's really shaping up to be quite dynamic. I think it's fair to say if clients are planning to come to market this year to hire, are there any tips or pieces of advice that you'd like to offer that they should maybe take into consideration?
Yeah, I'd say there's 3 key things to really focus on if you are thinking about hiring or you've got hiring plans for the rest of this year and for next year. First and foremost is understand your value proposition, what people will get back from you as an employer and what you can commit to for your people. Being able to really invest in the candidate experience will be really key as well. Clear communication, sharing feedback with candidates that's constructive, helping them understand if there's any hold-ups or time delays. Just that tiny courtesy does a world of difference when it comes to your funnel of pipeline candidates. And finally, not just focusing purely on experience, hiring for potential is as important and as powerful as filling the skill set gaps that you have in your business. Thinking about those that add value culturally, but also that you can develop and upskill, and that will help not only with your candidate experience piece, but it also helps with retention long term.
Brilliant. Thanks very much.
Thank you.